Hi, my name is Nathan Davis, and I'd like to give you a mortgage market update for the week ending August 24th. So really over the last couple of months, we haven't seen a whole lot of changes in mortgage rates. Right now, rates are trending between 4 and 3/8 and 4 and 5/8 on a 30-year fix, depending on whether you're looking at an FHA or conventional loan. Now, we just recently read the meeting minutes for the Federal Reserve meeting that occurred a couple of weeks ago, and it just kind of goes into what did they really talk about. No surprises. The Feds do continue to plan on raising short-term interest rates. Where they didn't do it at the last meeting, they are planning on doing it here in the near future on their next meeting, which again was to be expected. And again, we continue to expect it into 2019. Now, where that doesn't have a direct effect on mortgage rates, it does kind of give you an idea of the trend that we should expect with mortgage rates at some point, as long as the numbers for the economy continue to look like that they're growing. We'll pay close attention to jobless claims and inflationary numbers. Those are the kinds of things that can move mortgage rates here in the near term. Also, too, want to pay attention to any international turmoil because that can always balance out anything that's happening with regards to, again, those jobless claims or inflationary numbers. So good news, again, steady interest rates haven't changed a whole lot. I'll certainly let you know if I see anything change over the course of the next several weeks. The other thing I want to share with you is recently the Q2 2018 numbers came out for the Federal Housing Finance Agency House Price Index. This basically measures home appreciation from a quarter-to-quarter basis for our individual MSAs. So it looks at Collier County, Lee County, and even Charlotte County. So we really get to kind of drill into the data. And what we're seeing is what we've really been talking about. If you think about the way appreciation had been going at 12+% year over year, that just couldn't continue. You think about driving down the highway and you're doing 80 miles an hour, and then all of a sudden you see the speed limit sign change to 55. Well, you don't slam on your brakes. You kind of gently ease off that gas pedal until you get to the new speed limit. Well, that's kind of where we're at right now with our markets. We're kind of slowly dropping down into appreciation levels that are more normalized. That doesn't mean that there's a bubble or that prices are dropping. It just means the level of appreciation is slowing down a little bit, again, which is normal and actually a good thing. So right now I'll share some data with you for the Q2 results for Lee County. There was actually a 2% drop from Q1 to Q2 2018. So it actually dropped, the level of appreciation went down 2%. In Collier County, it actually went up 1%, and in Charlotte County, it went up 2%. So a little bit all across the board, a little different for each area from Q1 to Q2 of this year. However, when you look at year over year, so if we take Q2 2017 versus Q2 2018, all three markets show a 7% annual increase. Okay, so if you figure you bought a home in May 2017 and you want to know what the value is now, well, basically a $200,000 home would be worth $214,000 virtually in each market, the way the house price data shows. So again, valuations are still going up. Good news, but just not at the rate that we saw it before. Not to be, that's certainly to be expected. Think about it. We dropped dramatically after 2008 or so. So, it came up sharply, around our 2012 numbers or so. And now they're just leveling off. So again, not a bad thing. Just much more predictable appreciation. So I'll continue to keep you posted as we see those numbers come out probably in a couple months for Q3. The last thing I want to share with you is many of you may have seen a program called Rate Plug. It's a service through the MLS system. Now, it's free to sign up for you as realtors. And the neat thing that it does is it populates interest rates and payments on your listings automatically. So when you send out 4 or 5 listings to a potential buyer, within that listing is going to be a little section they can click on and see mortgage rates and payments on a variety of loan programs for that particular home, which would include taxes and estimated insurance. Now, again, that's a nice way to set yourself apart from other realtors who may not be using Rate Plug through the MLS. Also, too, it allows us as loan officers to be able to very quickly and efficiently provide you flyers for open houses or just to have available as you do showings. So I've attached a little link to the email that I sent with this video. Check it out. You can sign up in a matter of minutes. You can select Nathan Davis, and then again, we update the rates weekly on there as well as the programs. And if you want a open house flyer, I can quickly generate one for you. So check it out. I think it's a really great service. And my prediction is in the next couple of years that virtually, most realtors in Southwest Florida will use this in some form or fashion just as a value added for the potential buyers. So I hope you appreciated the update. My name is Nathan Davis. Phone number is 239-898-8841, or catch me on my website at agentslender.com. Have a great weekend.